13th of September. Good morning to everyone. This is your Business Morning with me, Bosin Omofaye. Let's get the show started. It's been a very interesting week so far on the business, economic and markets front. So let's wrap it all up together today with a few perspectives on the week we've traveled so far. But this is one good news, and it's quite big as we consider the future of Nigeria's economy. The Edo State government is moving to develop a 30-year economic development plan, as the state governor, Godwin Obaseki, yesterday told the 35-man technical committee to provide the needed tools, guidelines, and milestones for the state's development planning. This is the first of such subnational long-term development plan since Nigeria's post-Civil War National Development Plan of the early 1970s, and the current plan being pursued by the Edo State is beating the federal government's ERGP 4-year program, which terminates next year. Godwin Obaseki told the committee that as a government, that is Edo State, we didn't have the benefit of a forward-looking plan on which to act upon. So he told the team that the crisis in the government today, as some people in government are working at cross purposes because we failed to outline and define what we want to achieve in every respect. According to Godwin Obaseki, he told the technical committee that the plan is needed to build on institutional memories, system, and processes to make it workable and define the future of Edo State. Godwin Obaseki says, if you think about Edo today as part of the Midwest region and Bendel, our achievements were due to proper planning as people sat down at that time to plan. Now, Edo State, under Godwin Obaseki, is moving to roll out or to develop a 30-year economic development plan, the longest by any state government in Nigeria's history. Meantime, kudos and knocks have trailed Nigeria's government's plan to raise value-added tax to 7.2% from previous 5%, as the Senate panel has summoned the finance minister and the chief of the Federal Inland Revenue Service, Babatunde Fowler. Meantime, labor unions are telling the government to consider the negative impact of the new VAT increase to 7.2% on the new 30,000 minimum wage. And so far, there's very little to cheer from Nigeria's recent economic data. Last week, we got the second quarter GDP reading 1.94%, lower than 2.10% in the first quarter of the year. Then this week, we got a capital importation data, which came in at a negative 48.21% on a year-on-year basis. 2 days ago, the Statistics Office released the foreign trade report, which shows a positive 4.42% second quarter in terms of foreign trade balance. Total imports in the second quarter ended June 8.20% better in second quarter over the previous quarter, and total exports value 1.34% better than the previous quarter. If we look at the FX reserves currently, we've had about nearly $46 billion a year high, but now we're reading FX reserves around 42.96 billion US dollars. We put some of these economic data and fiscal policies, direction, and actions of the Buhari's administration to some of our guests to give us a sense of all of this and what it means for the market straight. That's in a couple of minutes from now, but let's check in very quickly with the marketplace. We got 0.39% reading on our stock market index on Wednesday. Then we topped that up with 1.01% on Thursday. And it looks like investors are coming back, but some folks believe profit-taking could set in as much as the gains are just coming through. Temple Ashaju, as always, is looking at the market side of the show for us. It's live to us from our studios at the Nigerian Stock Exchange. Downtown Lagos is good. Thank God it's Friday, Temple. The market can use some breather, as it were, and yesterday was quite a big jump.
Well, sure, Bosin. I mean, yesterday was quite a big jump. If you look at the percentage movements, the absolute points movements, and of course the addition to the equity capitalization of the market was quite a big jump. But the turnover remained something that kept on baffling a lot of investors, a lot of traders, in the market, analysts, some analysts inclusive, until some came back and started looking at the numbers, revisiting the number as things were. Because again, if we look at the activity level yesterday, there was sort of a 45% decline compared to what we did in the previous trading session, to just 854.28 million naira. And if you then look at the addition that we have in the equity capitalization, and of course the gains to the key benchmark indices, which is a whopping 1.01%. It looks like it didn't add up, but we've been able to get some analysts to revisit it, and we understand that it actually added up, because again, on Axis Bank and GTB yesterday, those were the two key stocks where we saw some huge, some real volume, some real transaction. Axis Bank, for example, did some 119 million worth of transactions yesterday, while GT Bank, which opened at 26 naira 90 kobo, actually closed up tick at 27 naira 50 kobo, adding some 60 kobo to the share price, which translated to some 7.28 million units of the shares valued at 198 million naira. But if you look across board again, a lot of these stocks didn't really do so much of volumes. But we know that all of that is as a result of bargain hunting and, of course, the price appreciation that we saw on Axis Bank and Guarantee Trust Bank eventually. That's how we arrived at what we got yesterday. But basically, the bellwether stocks was in the markets were the key drivers for the markets yesterday. Top trade, as I hinted, as I said earlier, Axis Bank did 0.71%. 17 million units of its shares at a value of about 120 million naira. If you look at the activities level, it was down by 45%. As key sectors in the market, all the sectors actually ended in green yesterday. In the consumer goods side of the market, Dangote Sugar, Nestle, all raked in some good gains due to some kind of re-entry on Nestle as well. Industrial goods, insurance, and of course oil and gas all did some real good. Forte Oil was able to make a comeback with some 9.64% yesterday and pushed up the indices of the oil and gas sector, which closed uptick some 0.49%. And of course, if you look at the energy stocks, it's the same thing. Forte Oil was the only stock that actually experienced some kind of appreciation among all of those companies over there, in spite of the fact that we had some mild volumes, across the counter as things were, because again, a lot of investors have actually not indicated so much interest in all of these oil and gas marketing stocks. This takes us to the NASD where you have the unlisted securities market, and down yesterday by some 0.42%. We got just 123,850 units of stocks traded on that side of the market yesterday. We have just 5 deals. Of the 5 deals, CSCS had 2 deals there. WAMCO had 2 deals. Eventually, we saw WAMCO dipping by more than 1%, 1.61% precisely. NIPCO was down yesterday. It had just 1 deal, and of course, that's just some 50,000 units of the shares traded there. And for the debt markets now, starting with bonds, bonds actually traded weak. The weak sentiment on that side of the market continued to move on. We saw bid and offer spreads, remaining wide yesterday. Sellers also concentrated at the short to the mid end of the curve, but yields remained stable. There was basically not too much change. And for the treasury bill side of things, we got a bearish sentiment on that side as well, because players expected supplies from the OMO auction that happened yesterday from the central bank. But eventually we saw yields expanding by some 9 basis points on average at the short end of the curve. Bosun.
Yeah, Tempo, thank you so much. I can see today's market is looking a little bit green yesterday, taking a cue from yesterday. But let's see how that pays out before the end of the show at 11. Thank you so much. See you back in about 40 minutes on the program. So one of the big stories that got a little bit trampled in the entire fiscal policies, budget, MTEF, whatever it is, capital importation, a raft of economic data, has to do with one of the biggest companies on the Nigerian Stock Exchange. Once a very big blue chip. It's called UACN Nigeria PLC, one of the oldest companies doing business in Nigeria's history, listed on the marketplace. It's now a conglomerate a couple of years ago, UACN expanded its horizons, added a few subsidiaries, and one of them is UPDC, which is the United Property Development Company PLC, which is basically in a real estate business. That was when real estate business was big business. But since 2016, we've seen a downturn in Nigeria's real estate as the Buhari's administration go after big names in the housing sector. With the anti-corruption, Nigeria's big real estate market has taken a nosedive. So you go through Abuja and Lagos, two of Nigeria's largest cities and economic hubs, you find a number of estates and property not doing really well. So UACN wants to unbundle UPDC, create 3 new companies, revitalize UPDC. Nearly 16 billion naira is a big story out there, and we want to unpack that unbundling plan and recapitalization for you. Let's talk to Yinka Ademuago, who is a research analyst in charge of Sub-Saharan Africa consumers market at United Capital. Actually, he's the author of this 2-page report that we're talking about this morning. Good morning, Yinka. It's good to have you on the show.
Good morning, Boston.
Yeah, thank you so much. In summary, let's just go through this in terms of what UACN is trying to achieve. But first, take us through the road that UACN has traveled to this point as far as UPDC is concerned.
Oh, correct. UACN, as we all know, is the parent company of UPDC. UPDC is a subsidiary to UACN. And it owns about 64% interest in UPDC. But as its full year 2018, UACN reported its first loss after tax in about 10 years. And this was largely dragged by the UPDC business. UPDC is the real estate side. UACN is a conglomerate that is invested in animal feeds, logistics, packaged foods, and all of these have contributed highly to the growth of the company. But UPDC, since the recession in 2016, UPDC, the real estate sector have been in recession, and UPDC have felt the heat also. So this has kind of dragged the performance of UPDC, and also accordingly, they've taken on more debt. Between 2016, as of 2014, the size of debt of UPDC was about 10 billion, but as of 2018, it has grown to about 14 billion. So all of these impacted finance costs. Operational costs also increased due to the operating environment in Nigeria. So these have dragged performance, and that is what prompted the unbundling exercise. So what we're seeing, what this is like is, because it is 3 companies that are involved, there's UACN on one side, there's UPDC on another, and there's UPDC REIT, that's the Real Estate Investment Trust. So UACN is invested in UPDC, owns about 64% interest in UPDC. UPDC owns about 61% in UPDC REIT. So what we interpreted this as is UACN is letting go of the problems child that have been impacting negatively on its bottom line, contributing less to its top line. Because UPDC contributes about 4%, less than 5% to UACN top line. But at the end of the day, by the time it gets to the bottom line, UPDC have eroded whatever gain it's getting from other businesses. So what they are doing is to let go of the problem child in UPDC and also give investors something to share in UPDC REIT. Because for UPDC REIT, they've been consistent in paying dividend. Since the time they've been incorporated, they've been consistently paying dividends to investors. And this is why you wouldn't see a lot of activity on UPDC REIT. It is not a very liquid stock at the moment because not a lot of people are willing to let them go because of their dividend paying profile. So all of this, what they're not doing is they are compensating investors with this UPDC REITs with good dividend history, while also at the same time they're trying to let go of the problem child, Watson.
Okay, yeah, you get quite a fair assessment of the road so far. But if you look at the Nigeria's real estate sector, you have UPDC and a few other real estate investment trust companies. What exactly happened? You talk about recession in 2016, correct. But again, what exactly is the problem with the Nigeria's real estate markets? Are we talking about the what you call the downstream or the upstream? Upstream is where you have the big estates, the big high towers in Ikoyi, Victoria Island, and in Abuja. Is that where the market is really in a doldrum, or the face me, I face you market?
Yes, for UPDC, they play in the retail and the commercial space. So they are both in the downstream and the upstream segment. But what we've seen since 2016, as you know, Boasin, consumer purchasing power have weakened, and not a lot of consumer, even disposable income is weak. Once the disposable income is weak, you wouldn't expect a lot of activity in the real estate segment, because not a lot of people will be thinking about building houses, about construction, because at that moment, what they are thinking about is their upkeep, food, necessities are the priorities of the consumer, how they can be fed, how they can clothe themselves, at least pay rent. Because if you look at it, as at 2010, the occupancy rate of UPDC, of most of its property, was about 65%. But according to the latest presentation given by UPDC, occupancy rates are falling drastically to about 25%. So you can see that they've been largely impacted by the low purchasing power in the economy, because there's the consumer disposable income is weak at the moment. High inflation, double-digit inflation have eroded most of those disposable income. So we've seen a rotation towards more necessities at the moment.
Okay, you
said look at the quarterly real estate. Okay.
Yeah, you said in your earlier comments that UPDC had sort of become like a problem child in the portfolio of UACN, so it needs to let it go. But this is coming at a very deep cost for UACN. This is nearly 16 billion naira rights issue that UACN is looking for. How feasible is this in the current state of the market for UACN to pull this money together?
So yes, because if you look at the UPDC came to the market in 2017 to do a right issue, and that particular right issue was not that successful. It was not overly successful. So investors are asking the question, would this be successful? So from our own perspective, if you look at it, we believe this would be a bit successful because of the attractiveness of UPDC REITs. Because if this is done, you get to have some interest, some share of the cake of the UPDC REITs, the dividend-paying UPDC REITs. So you would want to see investors buy into that because the unbundling will be based on the post-right issue number of shares that you hold. So that is on one side of all of this discussion. So the attraction here is the UPDC REITs that has an historical, consistent dividend-paying. It has been a consistent dividend-paying company. So this will be the attraction for investors in all of this unbundling.
And do you think, finally, do you think there will be a rub-on effect positively on the parent company, UACN PLC itself?
So yes, there is. This is positive for UACN. We believe this transaction is positive for UACN because UPDC, as I said earlier, contributes less than 5% to its top line. But by the time you get to the bottom line, the problem child have taken the gain that it has recorded from its paint business, its logistic business, its animal feed business. All of those gains will have been eroded. But now that this unbundling exercise is being done, you would probably see those top-line growth that we've seen from those other business trickle down to its bottom line, which is positive for the company going forward. But for UPDC, the right issue is also positive for them in a sense, because if you look at the months to date, because before coming here, I had to check on Bloomberg what the months to date for both companies are. You've seen a lot of buying interest in UPDC, and you've seen a couple of buying interest in UACN. For investors, they've started to price in the expectation that this will be positive for the UACN bottom line. Then also the right issue, if successful, would also be positive for UPDC business. But the problem for UPDC is not that of finance cost alone. There's the operational part of UPDC challenge, because by the time you've gotten to operating profit, you have little left that could trickle down to the bottom line. So the UPDC business, we are not so optimistic about the business because of the overall sector challenges. Because consumer wallets remain depressed, and so we are not likely to see increase in demand in that real estate segment. Until we see bold policy reform, as you know, Boasin, VAT was proposed to be increased to 7.2%, and this will further affect consumer wallets. So how this is kind of negative for the real estate business too going forward.
Quite a lot moving forward that will happen in the real estate with all of this put together. Thank you very much for unpacking UACN's unbundling plans of UPDC. Thank you so much, Yankade Muagun, research analyst in charge of consumer markets for United Capital, in charge of Sub-Saharan Africa. Thank you so much. Have a great weekend. Let's come back and check in with Buharinomics. And what does it all mean for the marketplace? That's what we're talking about when we return.